the picture of power. And as long as we don't have too much power, the picture of power states that pullbacks will normally rebound. Red will normally be a temporary phenomenon that green will likely resume, okay? And then I'm going to talk to you about this. So here we have Western Digital's, a company called Western Digital. It's not important which stock it is or anything like that. Oh, is my screen gone? Okay. Just pull this back in here. Got it? Okay. So notice how you have here the 200 period moving average. This is the average price of the past 200 bars. And your blue line, the average price of the past 220 bars. Right? Now, every bar, this blue line grows by one spot because it drops the first plot and adds the new plot. So every bar, right? Progresses. Now, because it's an average, it's a lagging indicator. Now, which is fine. We want it to be lagging. Now, so the picture of power is when you have a rising 20 above a 200. The 200 does not have to be rising. It's the 20 period moving average that must be rising. Rising 20 above the rising, rising 20 above any form of 200 is and your stock is above both, you have the picture of power. Now, here's the general idea. One, you might have to log off and log back on. Everyone has the image. Here's the idea that red or pullbacks will tend to be temporary unless you get too much power. Now, here we have green and then red. Green and then red. Green, green, and then red. Green and then red. Green, 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 and then red. Green, 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 green. You get the point. So during the picture of power, not only is red temporary, green will be the dominant color. Green will produce the most bars. Red will produce the fewest of the two. So as a general guideline, one can get into a stock. Generally, please understand this word, generally. One can get into a stock in the picture of power when green surpasses red. So, look, green surpasses red. Green surpasses red. Green surpasses red. Right? Does that make sense? Picture of power. When green surpasses red, boom, generally speaking, you can enter. You can jump into the picture of power when green surpasses red. Right? What do I mean by green surpassing red specifically? I'm going to show you that next. Right? Now, notice that the picture of power is beautiful here. Nice, but there's a point where the wideness, it's so wide that you have to stop. Now, let me tell you what I consider to be when a stock gets too wide to rock with this. You're too wide when you've got all three fingers like this. Finger one. Let me do it like this. I'm going to do it really wide for you so you can get the point. Here's finger one. Here's finger two. Here's finger three. When you're three, if you do this with your three fingers, you hold your if you have your thumb, hold your pinky down and spread your three fingers apart. That's the picture of too much. When your stock is way up here, above the 20, and when your 20 is way up above the 200. So you have, for instance, look this. You got the 200 here, you got the 20 here, and you got your stock or whatever you're trading here. And you've got these two wide spaces between the three. You see? And this is Flavio, that's on you. Everyone else's sound is fine. You might have to log off and log back on. So when you have the three wide finger scenario, it's too much. Now you stop assuming that red is a temporary phenomenon. You actually start thinking that red might kick off a reversal. All right? So as long as your fingers or your three items are relatively close and not too far, you're fine. But look at what happens to your stock. All of a sudden, you take this sudden accelerated move away from your 20, your 200, and you start to get this dual space, these three fingers spread apart. Do you see this? Do you understand what I'm saying? When three get too spread apart from each other, it's too much. You're done. You're finished. Now understand this, guys. Markets are breathing mechanisms like this. They go like this. Let me show you this. Markets go like this. They breathe. They exhale, then they inhale. Inhale, exhale. And then they inhale. They exhale again. And then they inhale. Now, this is both down, exhale, and inhale. Down, exhale, and inhale. Or up, exhale, and inhale. Exhale, and inhale. One of the keys to trading properly is knowing, am I at an exhale point or am I at an inhale point in the market? Well, when all three items are together, you see this? Again, all three levels, 200, 20, and your stop, all clustered together. What do you think that is? Which state is that? Inhale or exhale? Somebody tell me. I want to see if you're paying attention. Inhale. All right. So we inhale. Now we exhale. See? When you exhale, you are likely due for some form of inhale again. So this concept alone would say, why would you want to be an eager buyer after an exhale point has been achieved? Aren't you more interested after some form of inhale has occurred, not after an exhale has occurred? Wow. You will never again be an idiot buyer here, because you'll say, well, wait a minute, this is far above the 20 and the 20 is far above the 200. This stock is just exhaled. It doesn't mean that it can't go higher, but the odds aren't good for me. But here, oh yeah. And what you're looking at is a 2-minute chart. I'm going to tell you why. I train my traders who are looking to make money every day in the markets. If you want to make money every day in the markets, I train you on the 2-minute time frame. The two predominant trading time frames, if you want to make money every day, is 2 minute and 5 minutes. So that each bar is either 2 minutes or each bar is either 5 minutes. You're looking at each bar is 2 minutes of trading. All right. It's not, Soraya is saying it's cheaper to buy in the exhale. Well, that is not always true because it depends on where the exhale is. What if this exhale moved this way? Now, buying here is cheaper. So don't think in terms of cheap or expensive. Think in terms of most appropriate entry time to think about igniting a new play versus the most appropriate time to think about ending a play and certainly not igniting a play in the direction of the exhale. All right, so remember, exhales can be up or down. Don't think just up. It can be down too. All right. You don't need a gap for this concept. This concept is just understanding that the market breathes and that you should not be initiating new positions after an exhale, after a three-finger spread. You need some type of inhale to happen next. Now, let me move on, guys, because we got a lot to cover. All right? Here's another example. This is from yesterday, guys. These examples are from yesterday, most of them. I like to use, and a lot of times I like to use some past charts, but some charts from yesterday too. So when do you start to get the picture of power? Here. You know, you got your rising 20, above your rising 200. Now, look at your temporary red. It's temporary, 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 temporary. But at a certain point, you can start to get too wide apart. So the idea is to know what the picture, to understand when you have a picture of power up or down, because you could have the reverse, right? You could have declining 20 over the 200 and your stock declining. That's a picture of power down, but these are picture of powers up. And when you have the picture of power up, when green overtakes red, you can enter. When green overtakes red, you can enter. The other thing I will say is that I like entries that are relatively close to the 20-period moving average. So I don't want to be entering up here far above the 20. I always want to enter near the 20. There's green overcoming red. I don't want to enter up here. I want to enter down here. Here's green overcoming a red. Here's green overcoming a red. Up here, if green overcomes a red, I ignore it. It's too far away. I don't like the three-finger spread entries. I like getting in near one of my key items. Near the 20-period moving average is good, or near the 200-period moving average is good, but away from them both, no. Tell me you understand this. Right? So you understand what the picture of power is. You understand what too much power is. And you understand that when you have the picture of power, when green takes out red, it's a potential buy as long as it's not too far from the 20 or the 200. Beautiful. These are all basic concepts, but very powerful. They're going to become very powerful when we start to delve into the specifics. All right? Here's another picture of power from yesterday. Kraft Heinz Company from yesterday. Now, what state is this in? I want to see if you're listening. What state? The market has two states. What state is this in? That's right. Inhale, which means that a big move is imminent in the form of an exhale. The question is which way? A lot of times we don't know. The exhale could be this way, or it could be this way. You just have to wait and see. But when that 20 starts to rise and starts to get above that 200, and then your stock is above both, now you can start. Red takes out green, not too far away from the 20. Boom! Red takes out green. I'm sorry, I'm doing the reverse. Green takes out red, not too far from the 20. Boom! And green takes out red, not too far from the 20. Boom! Green takes out red. Boom! Green takes out red. Boom! Green takes out red. Boom! But here we're starting to get a little frothy. You can get too much. And if this stock shoots up here, then you have the true three-finger spread, all bets off. So someone was saying, well, Oliver, why is it that red is not significant in the picture of power? I thought I explained that, but I'll explain it again. You cannot have this picture unless institutions are aggressively accumulating. So think of it this way. Kraft trades billions of dollars worth of stock a day. It takes big money to make this stock go up, big money going in to make this stock go up steadily. So, is that your neighbors making Heinz go up, creating the picture of power? No. Is that your family? No. Are those your friends? No. To lift a Heinz takes billions. So who must be going in to have the stock rise above the 20, to have the 20 rise above the 200? Who is buying to create that picture? Institutions. Now let's jump on board their train. You can't lift yourself after you buy. Your parents can't help you. You can't say, I've just bought Heinz, Mom and Dad, can you guys buy now and lift the stock? You can't go to your friends and say, I've just bought Heinz, can you guys buy now and lift me? You need someone more powerful than you to continue to buy. So institutions are this is the picture of proof that institutions are aggressively accumulating the stock. Otherwise, it could not be done by flimsy buyers. And institutions just don't buy once. They buy continuously for a while. Right? Market makers representing the institutions, right? Not just market makers, they're the representatives of the institutions, but not necessarily the institutions themselves. All right, okay. Now, so, right, we're following the first money. So here's where we get into detail. Those are all very broad strokes, traders. Broad concepts that keep you on the right side of the fence. Guys, if you just play pictures of power, you know how better your odds are of winning? If you just go long in pictures of power, you can go long basically at the wrong time and still make money. You can trip and fall into the stock clumsily and make money. You can by mistake hit the buy button in the picture of power and probably make money. The problem with most novices is that they're always trying to find the counter move against power. There's a time to do that after a big exhale, but they try to do it as a matter of course. See, the novice mindset says, since I missed all of this, I'm going to go the other way. You've all felt it. You've all done it. It's stupid. You've all been there. You've all been stupid. Always missing. So since you miss, you're going to just fight it and go the other way. It's stupid. You're putting yourself in front of a freight freaking institutional train. billions of dollars. You're putting up your little $2,000 against billions of dollars going in this direction. How stupid. You don't fight the pictures of power. I've helped you define what that billion-dollar train looks like. Don't fight the billion-dollar train. Jump on the billion-dollar train. Tell me you understand this. Just a few. All right. Cool. Now, here are the specifics. I am so freaking excited. Here we go. Nobody's internet fail, please. Now, I'm going to teach you to now combine the two most important bars, your elephants and your tails, with the two moving averages, right? And how we're going to take where these two bars appear in relationship to the two key moving averages, and we're going to turn this into freaking money almost every day. So listen, whenever you open above these two moving averages, we're going to call that positive territory, right? Or bullish territory. And whenever the stock opens for the morning below these two moving averages, we're going to call this negative or bearish location. So we got positive or bullish location above the two moving averages, bearish location below the two moving averages. Right? But the most important moving average of all is the 200. So sometimes if my stock opens here, I'm okay. It's not above the 200, but it's above the big guy. And the 200 is not too far away, so I'm okay with it. So the 200 is the main one. Of course, if it's above both or below both, that's ideal. But it's got to be at least above or below that main one that I'm looking for. Now, if you get an elephant bar, the first bar of the morning, the first 2-minute bar of the morning, let's all assume we're looking at a 2-minute chart. So this bar represents 2 minutes of trading. It's the first 2 minutes of the morning. And you say, wow, I've got that bar that Oliver talks about. That's an elephant bar. It's nice. It's relatively full. It's solid. It might have, wow, it's loud. It might have a little tail or so on the top or bottom, but the vast majority of the bar is solid green. Boom, I've got my elephant. I have found my institutional footprint. What do you do next? Pretty simple. We're going to freaking buy the moment, the instant, the nanosecond, boom, that a subsequent bar trades above the high of my first elephant bar. I mean, we don't wait for this bar to finish. I mean, the second, the millisecond we move above the high of my first elephant bar, boom, you buy. And this bar will continue to move up and down. The mistake that some people make is, well, Oliver, I want to see if it stays above that bar. No! You don't need any more proof. This is your proof. Don't demand proof from this one beyond going above the high of the elephant bar. Don't wait. Don't hesitate. Don't try to say, well, let me just see if it's real. No, this is the proof that it's real. You don't need any more proof. You dive into the next bar that goes 1 penny further than your first bar. So if the high of bar number 1 is 20, your buy is 20.01, not 20.02, 20.01. Well, of course, if you miss 0.01, then you buy 0.02. Not that much of a difference. I hate hesitators. When it's time to act, boom, you go, you trade, or you go home, and you trade big. So here's what I'm going to tell you now. Remember the $50,000 that you're going to have. Guess what? You're going to take half of it. Oh, yes. Oh, yes. You are going to take roughly $20,000 to $25,000 of your account and boom, right at that penny at 20.01. I want you to put $25,000 into the market right there. Boom. We play big. We don't play like, oh, but Oliver, I think I'm going to put a little tiny toe in the market here. I'll taste it a little bit. We don't make money like that. Get out of here with that nonsense. Boom, 25. I want half. It's my money. I tell you how to use it. You take half of what I give you. Boom, you put it on the line right there. You're going to make this thing count. 25K right here. Boom, right there. Now, what we have to protect ourselves, right? We got to protect ourselves. You protect yourself under the very reason for your buy. The elephant bar is the reason that you're interested in the first place. The location is beautiful. Why is the location beautiful? Because we've got elephant bar, positive bullish elephant bar in a positive bullish location above both the 20 and the 200 period moving average. Now, that's not enough. I need confirmation follow through. So the first bar is an elephant. All right, now show me that this is not a one bar phenomenon. That's what you're saying. Show me this is not just a one bar freak occurrence. Boom, second bar breaks above the high. Boom, $25,000 in. Now, stop below the low of your reason. Why would you want a stop if the very reason for your buy has been eliminated? We're going to have a percentage of stocks that once we buy, goes straight to our stop. Boom. Stop out. Okay. We're big boys, we're big girls. We lick our wounds and we move on to the next play. That is a portion of your plays, and there is nothing in the world you can do about it. That's why we have a stop in the first place. Because if it was a way to eliminate that occurrence from ever happening, we wouldn't need it. But we can't. The same way a poker player can't expect, a master poker player doesn't sit down and expect to win every single hand. But the true masters wind up at the final table almost every tournament. But they have lost hands along the way to that final table. Don't expect to ever get to a point where every hand is won. That is ridiculous. That is naive. That is being a child. That's being stupid. So we protect ourselves. But guess what? If you follow my method, for the rest of your living life as a trader, you will never lose more than one bar. You will never lose more than your elephant bar. Because your stop is right under your elephant bar. You buy right above the elephant, and your stop is right under the elephant. You lose one bar. If you buy above a tail bar, your buy is above the high of the tail bar, and your stop is below the low of the tail bar. You lose the tail bar. You see what I'm saying? You lose one elephant bar every loss, or you lose one tail bar every loss. But get this. Whenever you win, you'll win 14 4 bars, or you'll win 3 bars, or you'll win 15 bars, or you'll win 10 bars. But every time you lose, you'll lose 1 bar only. Oh my God. Oliver, how How novel. I'm losing less than I'm winning. What a novel idea. How great this is. Where do I sign up, Oliver? This is amazing. I've never heard of this. This is freaking basic math. You don't need to pay anybody for this. Lose less than you win. And you will stay in this game forever, for life. No one will take you out of this game if you limit every single loss for the rest of your life to 1 bar. Be the 1 bar loss expert. Don't be a profit expert. Be a loss expert. The loss experts are the winners. Every novice out there is trying to be a winning expert. You be a 1 bar loss expert. Be the executioner at the low of your elephant bars. Be the executioner at the low of your bottoming tail bars. Don't allow a losing trade to go into the second losing bar. You eliminate that thing at the second. At the nanosecond, it eliminates the reason for your buy. You give it 0 chances. You are the boss. You are the employer. The stock is the employee. It either makes you money or it gets freaking fired at the bottom of your reason. Tell me you understand this. Do you have this so far? This is how you stay in this game forever. Novices are out there trying to outpace their losing trades with their winning trades. It's a losing game. Imagine this cartoon figure running real fast and he's out of breath and he keeps looking back, but his losses stay really close to him and he's going to run out of breath real soon, but his losses aren't running out of breath. His losses are chasing him and they're only running at a portion of their speed, laughing, just waiting to overcome the novice who's trying to outrun their losses. No, you don't outwin your losses. You eliminate your losses. You minimize your losses. You can't outrun them. You can only keep them contained. They will never go away, never. But you can keep them tamed inside of a cage, a 1 bar freaking cage. They never get out. Never let your losses get out of the 1 bar cage. And I promise you, you will trade until the day you die. This is the number 1 key for success. Everyone thinks the number 1 key for success, Oliver, show me how to win. No. First, I'm going to show you how to lose. Because guess what? If you buy here, traders, boom, $25,000 right at that point. I want you to put $25,000. You're going to protect the $25,000. You're not going to lose. That doesn't mean you're going to lose $25,000. That's what a freaking stupid untrained novice does. You're going to limit the loss to a small amount under the low of 1 bar. But if this goes up 4 bars, if your $25,000 rises 4 bars, what the heck did you do except pray? Absolutely nothing. You didn't call up Warren Buffett, your friend, and say, Warren, I'm in the stock. Can you buy a couple $1 billion now? You didn't do that. You didn't physically, with your muscles, push the stock up. All you did was freaking pray. You did absolutely nothing. No contribution from you whatsoever after you put the $25,000 in. Do you understand that profits are not your responsibility? Profits are your stock's responsibility. Profits are the market's responsibility. It is a partnership between you and your stock. You guys work together. You handle the downside. The stock handles the profit side. And you work together. You guys start off the game. You say, listen, I've given you $25,000. Now you do your job. And your stock says, well, listen, okay, I'm ready to run for you, boss. But Remember, if it's too tough for me out there, if the opposition beats me back down, I need you to save me. Will you save me? I got your back, stock. I got your stop right under the low. Don't worry. We're not going to get hit that bad. Just go out there, take this $25,000 and run, run. If they're too strong, I've got your back. I'm going to save the day here. And if you fail your part of the agreement, you will end your life as a trader in a short period of time. But if you constantly hold up your side of the agreement, trust me, stocks go up all by themselves without you. They don't need your help. They don't need your prayers. They don't need you calling up your friends. Winners happen by themselves, but small losses do not happen by themselves. Go to sleep in a losing scenario and watch you have big loss after big loss after big loss. Take a nap and watch you have big loss after big loss. Go to the bathroom and pray and watch you have big loss after big loss. Stick your head in the sand like an ostrich and watch you have big loss after big loss. Ignore your losing position and watch you have big loss after big loss. Your number one responsibility is to take the proper loss. The market's number one responsibility is to give you the game. Tell me you understand your role, your most important role of all. You are the executioner. The stock is the winner. And you work together. You don't do anything to make a win. The stock does. And the stock doesn't do anything to keep a loss small. You do. You both are in partnership. But guess what the novice believes? The novice believes that his job is to win. And that it is the market's job to stop going down. So oh my God, the market's going down and I'm losing. I hope the market stops. The novice has the game backwards. The novice thinks his game is to win, and the market's game. The novice believes that his goal is to win. His job is to win, and it is the market's job to stop losing. The master knows that it is his job to cut the position short, and it is the market's job to win. Novices have everything freaking backwards. But thank God for them, right? Aren't they our depositors? Thank God for those who do not know what I'm showing you today. Thank God for those who have the game upside down. Thank God for those who are traveling in the wrong direction. Thank God for people who are trying to play this game with $500 and $2,000 at a time. Thank God for them, because our life would not be as it is or could be without them. So while I disrespect them from a trained point of view, I love them dearly. If I could send each and every one of them a freaking Christmas card every year, I would. So we love them, but I don't want you, if you're part of my family, I don't want you to be one of them. All right, so we've got the amounts, 25,000. You know exactly to the penny where you're going to get in and exactly to the penny where you're going to get out. It doesn't work. Now, there are some things missing. When do you take your profits and all of that stuff? We're going to get there. I promise you, and I will not stop until all of this shit's covered. Excuse me. Guys, can you stop? After 31 years now, I still freaking love this. You don't understand. The hairs on the back of my neck rise. 31 years doing this, 24 years teaching traders all over the world, and it's still like day one. I'm still as giddy as a kid. Here's the second scenario. Bottoming tail bar. Opens above the 20, above the 200. Positive bar, positive location. When are you going to buy? You know when you're going to buy. When a subsequent bar confirms that this is real. Boom! How much are you going to put in? Right there. 1 penny above the high. Tell me how much money you're going to put in. Somebody tell me. Boom! $25,000. Take half your account. You got to make this work. Make this count. No, I hate timid traders. As I had one trader who joined my program in June, and as of today, has not placed a single trade. I want to slap her, but I know I can't. But I want to. I want to shake her so hard that she has to go to the hospital, but I know I can't, but I want to. This is fear. Fear of what? It's my money. Don't worry about it. Boom, put that 25K on the line. So what if it doesn't work? It's one trade in a lifetime of trades. Let's get over this fear of loss. The fear is not the fear of loss. It's the fear of you. Do you understand that when you fear in your trading, you fear yourself? The stock can't do anything to you. You can do something to you. If your stop is here, and then your stock does this, boom, you're supposed to get out. Plain and simple. But you're scared that you won't. That's where your fear comes in. I don't trust me, Oliver. I don't trust that I will do exactly what I know I should do. That's why I'm scared. I'm scared of me. That's what you're scared of. Because if I'm telling you this is a great loss, let's go celebrate. And what is your freaking problem? I celebrate the good losses because that's your number one job. I celebrate the good losses more than I celebrate the good wins. You know why? Because what did you freaking do except pray? Nothing. So you get a little high five from me. But when you take that loss like you're supposed to, when you rise to the occasion and pull the plug at the most difficult time it's to do, when you admit that this is not going the way it should be, and I'm going to fire the stock right here, when you do the difficult thing, that's when I'm your best friend. That's when I want to have dinner with you. That's when I want to pop champagne. Well, who has it hard when they put their $25,000 here and it goes up, up, up? Where was the difficulty in that? All right, you get a high five, and I'm cool with it because I share some of those gains. But I really honor that trader who shows me consistently that they don't falter when everything they plan goes against them. We're told that the character of a man or a woman is not judged when life is rosy and perfect, but the true character of a man or a woman is shown when every single thing in life seems to be piled against them and they don't lose their way. That is, as dark and as difficult as circumstances around them are, they hold their ground. They don't break their principles. They don't violate their stops. The true character of a trader is proven at the loss point, not at the win point. Anyone can take $4,000 off the table. But can you consistently fire your stock at the moment it should be fired? And can you then move into the next trade as if that didn't happen? Oh man, that's my guy. That's my girl. Yeah, that's who I am. Traders do difficult thing every single time and go into the next trade as if it didn't freaking happen. Is that you? I want it to be. All right. All right, guys. Still got a lot to cover here. We're rocking. We're rocking. Yeah. We're rocking. Executioners, that's right, Adrian. Boom! Put your 25K in right there. Boom, right there. Put that stop. Protect that. Protect a portion of that money right there. All right? Whenever you lose, you're only going to lose one bar, but when you win, it's almost always more than one bar. This is how you stay in business forever. These are the only two bars you need, traders. These are the only two that you need, at least in the beginning. Boom. Now, where do these open? Above or below? Guys, think about how basic this game is. Red bars and green bars. There's only two types, really. Well, there's a third one, the neutral bar, but primarily red bars and green bars. All right? Do you have a nice solid green bar, or do you have a nice solid red bar? Remember, tails are considered solid too in a way, because they still represent that. And are these bars above your key moving averages or below your key moving averages? I'm going to say this again. Do you have the picture of a powerful bar, an elephant or tail bar? And is that elephant or tail bar above or below your key moving averages? So think of how basic this game is. Red bars and green bars, above and below. Say it with me, boys and girls. Red bars and green bars, above and below. I'm going to say it again. Red bars and green bars, above and below. Red bars and green bars, above and below. Red bars and green bars, above and below. Elephant bars and tail bars, above and below. Above and below. Above and below. You got it? It's as simple as that. Now, check this out. Remember, everything I'm talking about, guys, is in reverse, right? So if you get a fat red bar here, you understand? If you get a fat red bar that's under, now you're going the other way. You put 25,000 in here, boom! You go the other way with the short. Protect. You see? Red bars and green bars above and below. Bars and green bars above and below. This little jingle can make you rich. I kid you not. It's not a marketing statement. Those of you who watch me trade live most days, or I pipe you into my live trading, you see me do this off the open almost every freaking day. It's based off these same concepts I'm sharing with you right now. You see me pull that rabbit out of the hat almost every single day, and it's based on the same thing I'm sharing with you right now. You say, Oliver, whoa, it's 6 minutes and Oliver's up. What? What does that mean? That means that I did something like this. Boom! Here's 2 minutes, 4 minutes, 6 minutes. And I'm taking profits. Or on the other side, you say, whoa, Oliver went short and he's up $3,400. Did something like this. Boom! Stop. To the downside. And as you hear me posting, 8-minute gain, $3,400. 2, 4, 6, 8. That's it. It's not freaking rocket science. You guys understand me so far? Is this understood so far? What I'm covering? All right. Still got a lot to cover here, guys. Still got a lot to cover. I haven't began blowing your mind yet because we gotta look at stock. So you buy, you got your protection. You guys know this now. This is all basic stuff. Now let's start looking at some charts. Let's start putting this into real application now. So here we take a look at Google. All right. Here's yesterday's close. We see that Google gaps up pretty sizably here today. And the first bar is a nice, fat, little solid green bar. I know it looks small here because I'm showing you, this is probably a little bit too much data. I shouldn't show you this much data, making the bars look small, but this is a really sizable bar. Let's ignore the price. I know it's $1,000. We wouldn't normally play up here, but it's about getting the concept understood more than the price. This could be $40, $30, $60. It doesn't. All right. So that first 2 minute goes by, boom, mark off the high. The next bar that clears the high, let me redo this. Boom! Put your 25K in, wherever that is. 25K. Protect yourself underneath. And the rest is history. Then we pause a little bit. But look at how many green bars compared to the number of red bars you get because of the picture of power. It's freaking ridiculous. Makes the game so easy. Easy. All right, we bring the complexity and the difficulty to the game. The market doesn't have that. It comes from us. As markets go up and down, that's very rudimentary. In fact, that's freaking primitive. All right? It's not complex. It's not a Ferrari's engine. Look, the pistons and the movements that are firing off when you turn on a Ferrari's engine, this is not this. This is ancient. Up and down. I go up or down. That's it. Sometimes I go sideways, but ultimately I go up or down. So we bring the complexity. What's complex about up or down? Nothing. Right? I go up or down. Boom, 25K, protect yourself. Now, look at what you're risking, guys. Look at this. Look at your risk compared to your potential gain. Now, how many of these fit inside of here? You see what I'm saying? This is how you stay in business forever. We lose one bar when we lose, but we win many bars when we win. You can never be eliminated if you do that. Never. My mom used to say, Oliver, never say never. Well, Mom, sorry, I'm saying never. If you lose one bar every time you lose, you will never be eliminated from this game. Never. Because your next win is going to take care of multiple one bar losses. If you do it right. All right. Now, I got to deepen your knowledge here a little bit. Because, you know, I say I hate a timid trader. Oliver, I think I'm going to put just a little toe in. No, we don't play like that. We trade big or we go home. Right? So now, the next thing that I despise is a trader who does not add to a winning play. We've got another $25,000, don't we? Oh, yes. So you're going to take roughly 1/2 of the 25,000 you have left, and you are going to freaking add to the play if it starts doing the right thing. Now, the question is when and where, right? So here's your add rules. Whenever you get a one single red bar sandwiched in between, here's one green bar, and here is one little small red bar sandwiched in between two green bars, and the green bar takes out the head of the red, boom! You take half of your 25,000 you have left and you dump it in right there, right above the high of that single red bar. The first one is mandatory. So, all right, you actually, if you look carefully, you bought on that bar. Because when this bar broke above the high of the green, it was green. Later, it became a red bar. You're like, okay, I'm going to stop this here. But what happened on 1, 2, 3, the fourth bar, is the high of the red gets, this single red bar gets taken out there. Boom! You put half of the 25,000, more or less. It doesn't have to be exactly to the penny and a half, but you know what I'm saying. You take a good chunk of that 25,000 and you add it to the play. On the very first time a single red bar is ignored, I call it the red bar ignored technique. One red bar, boom, green snatches it away. And when a stock is powerful, this is the scenario you will see rather frequently. Green, 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 one red bar, boom, as if the green says, what the heck do you think you're doing? Get that out of here. Get that out of here. Freaking red bar, get that out of here. What are you doing? Get that out of here. You know? So, that shows you how powerful the green is. Get that nonsense out of here. You know? Boom! Add. Now, there's two versions of this, right? There's two versions of this. There's the one, and then there's this one. So there's that green, and then there's that one little red, and then the green says, get that out of here. Or I did the wrong color. Then the green says, get that out of here. Boom. Eliminates it, right? You add there, add here. But then there's this scenario, right? Where you go, boom, and then you get that dual. And then it's like, oh, you're trying to double team me? Get that out of here. You know, so it's the one or the double team attempt by red. As long as those attempts are small and green snatches it away, you freaking add. Tell me you understand this. It's the one bar attempt or the little double team attempt. Doesn't matter. Green snatches it away and you add. You take half of what you have left. So guys, the way I look at this, right, is I like to break up my money into 4 pieces, sometimes 5. But let's say we break up our money into 4 pieces. So we take 50,000, right? And we break it up into fourths. 1/4. So 25 is a half, and you can't be exact on this, but we know that 12 and a half is 1/4. So $13,000 worth is one lot. So we got 4 bullets. When we first enter, I like traders entering with 2 bullets. Then when you add 1 bullet at a time. So when every first buy is 2 bullets, 25K, 12 and a half, 12 and a half. So we break our money into 4 bullets. We always enter 2 bullets. And when we add one bullet at a time until maybe you run out of money. Maybe you have all 4 bullets in the play. That's cool. As long as you put the extra bullets in when you're supposed to. So here's how this play could go, right? 25,000 here. Boom, 2 bullets there. Stop. 1 bullet here when the red bar gets taken out. That's 3 bullets, 2 plus 1. And here's your double team attempt by the stock. Boom, there's your 4th and final bullet. You got all 50K in. And you know what? This is the land of profitability. People say, but Luis, where are you going? I'm going to the land of profitability. Where are you going? You're going to the land of profitability? Oliver lives there. Yeah, I'm going to see him right now. You want to come? That's the train heading to my house, and I'm waiting for you. So I'm waiting for you in my house, in the land of profitability. And when I hear that sound, there's Luis. He's coming. Yeah. And when you arrive, it says, so what did you, Luis? So glad to see you, Luis. Yeah, man, I'm glad to be here, Oliver. I'm glad you're here too, Luis. Luis says, yes, Oliver? I'm like, how do I say this? Do you have something for me? Oh, Luis says, I almost forgot. Oliver, here's your 40%. Oh, thank you. Let's go in and eat. Come on. Got this amazing bottle of wine, man. Yeah, I want to show it to you. Come over into my wine cellar. Yeah, that's what I'm talking about. Do you understand? I give you the method, the training every day. I give you the money, and I just need you to do it right and just come to my house at the end of the day with my part. And we'll crack a nice bottle of wine, put out some fine cheese. That's it, man. That's what this is all about, wine and cheese. That's it. Any questions on this so far? All right, let's move on. I still got a lot to cover. I haven't even started the mind blowing yet. This is all basic stuff that you watch. You are going to leave this event never the same. I promise you this. You will never see the markets the same. You might mess it up every now and then, which is normal. But that's why I need you every day to correct those mess ups, to keep you on track, to keep it going, keep the momentum going, keep the journey going. So one day, man, you hit the tipping point. Boom. It's like almost you don't need me anymore. You just need my money. Some people say, well, Oliver, if I've already got it, why would I trade your money? Because I have more money than you do. They say, oh, wait, you're going to go trade with you've accumulated $100,000 with me, and you're now going to take your $100,000 and leave me? After I've invested everything in you? No, I don't think so. Here's $500,000. Now, won't you make more of $500,000 than your 100? Isn't 80% of what you'll make off 500 more than 100% you'll make off 100? Yeah, Oliver, you're right. I'll stay. That's how I keep my best traders. You know, they get up to 80 to my top trader makes 95% of the games. I make 5%, but he's huge. So, okay, he's the one trader. He's using my capital. That capital is way more than his capital. And 95% of my capital is better than 100% of his. And so that's why you stay. Why do billionaires open up hedge funds to get money from other billionaires? It's just bigger. Why not? Why do rich people not use their money for anything? Because that's the way you make more money and keep your money safe. Only poor people think about using all of their money. Oh, I don't want to be in debt. How ridiculous is that? There's good debt and bad debt. No, I want to buy my home. I want to buy my home outright. That's a poor man's mentality. You understand that? That you could put 10%, have the home, and put 90% into your trading and make more. Why would you want to tie up money making money? Rich people don't play the game that way. They use leverage. They use very little of their money. Now, you can do it wrong and mess yourself up. But I'm not talking about doing it wrong. I'm talking about doing it right. Right? So you're taking $25,000 that you don't own. I own it. I give it to you. You're taking $25,000 and putting it on the line here. That's not yours, but the gain is yours if we make it. You're protecting most of it with your stop underneath your reason, so you're doing it right. You're now using leverage. You're using other people's money to make more than your money can make. Now you're starting to play the game like a wealthy, rich person. OPM, we call it in the United States, other people's money. You have never read about a billionaire using all of his money for anything. Never. So you use my money. You use someone else's money. You don't use your money. You keep your money safe. That's the way this game is played. Never say never, Oliver. Oh, I'm sorry, Mom. I'm saying never in this case. All right. So here's that one bar pause scenario, guys, where you add. So remember, the first add is always 2 lots for 25,000 in this case. And then the next one is, so it's always 2 lots and then one lots for ads until you run out of money. Really. Then have to ride your play. Now, we got to talk about, so we talked about how to get in, where to get in, even to the penny, like you know to the penny, 1 penny above the high of this bar, boom. You know where you're going to exit, 1 penny below the low of this bar. There's nothing vague like, well, you know, you get out when you're X number percentage and da, 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 da. That's bullshit. I want to know to the penny what my risk is. I want to know exactly. I want it to be freaking scientific. Do you know that the science part of trading, trading is science and art. The science is the entry. The science is the ad. The science is the when to ride and sit on your hands. That's all scientific. I have a scientific approach where you know exactly to the penny what to do. Nothing ambiguous, no ambiguity, nothing vague, nothing general. But then there's the art part of the trade. The art part is profit taking, which I'm going to get to. Now, that's the art part. That's where you can get a little sexy. You can get a little fancy. I'm going to take some. I'm not going to take it all. This time I'm going to take all of it. The next time I'm going to take half of it. I'm going to take a quarter here and a quarter there. I don't give a damn what you do in profitable territory. That's not a problem. This is not a problem. Oliver, should I take all of my fortune now, or should I take half of my fortune and see if the other half goes much further, Oliver? That's not a freaking problem. So you can be a little sexy up there. But at the entry, no sexiness, precision, 1 penny above the high. At your stop, nothing sexy, nothing fancy. Just freaking eliminate the trade. 1 penny below your reason. Nothing sexy. No art, just sheer science. First, red bar pause, then the green says, get out of there. Boom. Nothing vague. 1 penny above that red bar, boom, you put another 1 lot into the play. Nothing vague at these points. Nothing fancy, nothing artsy. It's rule based. We do the same thing every single trade. This is what I don't understand. How can novices do this? Novices believe that by being inconsistent, they can produce consistency. How can, if you do this trade one way, and the next trade another way, and the next trade yet another way, and the next trade yet another way, you do this trade this way, then the next trade differently, then the next trade even more different, how can consistency come from inconsistency? They're looking for consistent results, but they're not consistent in what they do. Oh my God, this one is scary. Let me get out. What are you doing? It's not even at your stop. What are you doing? Yeah, but Oliver, it dropped really hard. But you had a stop in place already. Why are you interrupting your plan? Why are you changing in the middle of the trade? Because it dropped hard. That is not part of the plan. The plan is if it violates this price, get out. If it doesn't do that, stay in. What's so hard about that? But I got scared. I don't care. I don't care about your feelings. I don't care if you're scared. I don't care if you're happy. Just follow the freaking rules. It didn't hit your stop. Don't let the stock put on a costume, a Halloween costume, and say, boo, and scare you like a freaking little child. We've got a plan. Your stop is below here. See, a lot of traders, they get a red bar and say, oh man, I should get out. Wait a minute. Why should you get out? Because there's a red bar. I said, that's not part of the freaking plan, you idiot. What are you doing? Your plan is to get out here. Isn't that what we said? You get out here. It's not change in the middle of the stream just because your stock says boo. So then who's the trader? Is it the stock trading you, or are you trading the stock? Is the stock your boss? Oh, wait a minute. The stock just did this. I guess I should listen. Oh, the stock just did this. I guess I should do that. Who's the puppet and who's the controller of the puppet? You're supposed to be holding the strings, not the market, not the stock. You bring the law. You bring the rules. You don't let the market trick you out of your rules. You don't leave your post. I was a U.S. Marine. Do you know you would get killed by another Marine if you left your post? That they had orders to kill you. Do you know how dangerous you are in a war situation? If your orders are to guard this door and you leave the door even to go pee-pee, that another Marine has orders to shoot you dead on the spot. You man your post. But my mother's sick. No, man your post. But it got really dark outside. No, man your post. But I gotta go beep beep. No, man your post. All right? This is your post. You man your post. But Oliver, there's a big red bar up there. No, man your post. But the market is declining. No, man your post. But I need to go to lunch. No, man your post. You got into the trade, man your post. Do you follow what I'm saying? Does this make sense? I'm silly, guys. I'm sorry. All right. Somebody wants a break. You guys want a break? I don't want a freaking break, though. Just go do a quick break. Turn the volume up. Go to the bathroom. Get a cup of coffee. But you'll hear me talking, okay? All right, because still got a lot. Cool. All right, guys. guys, so check this out. Let's go back. Remember the 2-bar scenario ad, right? So remember, you got the 1 bar, boom, and sometimes they try to double team the green. It says, get that junk out of here. What is this guy? Get this red guy out of here. Boom. All right, put that half of whatever you had on the line. Oh, that's Spanish for buy. Boom. Just think of it as boom. Compra is Spanish for buy. Buy. All right? Protection you get. All right? Okay. So let's go back to this chart here for a second, guys. So you see that your ads, your buy is here. Your ad is, see this, I wish I could blow this up a little bit. But see that 1 red bar there? And then it gets taken out. Boom. And here's the 2 version. 2 little red bars side by side, and the green says, get that out of here. Boom! Now remember, all of this is above your key items. That's what makes it freaking work. You know? It's above the key items. Don't forget that. Your stock, the 20 to 200. Now we can play this. When green snatches red away, we can get in. Green snatches it away, we can get in. Green snatches red away, we can get in. Green snatches red away, we can get in. And when it gets too far above, let's think about getting out of this thing. All right, we'll get to that part later. Just a moment. I trade every single day and spend time with the traders every day. Gotta be done. All right, guys, so here, I'm going to show you. Now, let's go into some things. This micron technology, this is a chart from yesterday. Now, I bet you know how to play this now. So let's take it bar by bar. All right? And maybe we can even do something like this, guys. We can do something like this. Let me see if I can do it. Let me take a shape here, and I'm going to freaking cover this up. Why not? Why not do that? Yeah. Yeah. That's right. Yeah. Okay. All right. Boom. First 2 minutes of the trading day. You got shoot you, dude. If an elephant bar is powerful, get this out. If an elephant bar is powerful, and a bottom and tail bar is powerful, then what do you think freaking merging them together is? Super powerful. Okay, we open up. First 2 minutes of the trading day, we are above the 200. We are above the 20. We're above everything here. Now we're gonna say, boom. If a subsequent bar, and guys, it doesn't even have to be the next bar. A lot of times it is. But if a subsequent bar trades above the high of this bar, boom! I got my 25,000 ready. 25K. Don't be shy. It's my money. Put it in. Boom! Right there. If the next bar takes out the high of that bar, we're going to put it in and we're going to protect ourselves right there. Right? Beautiful. Now, let's do this. Boom! Bar number 2 is where you put the 25,000 into bar number 2. Do you see that? Do you see that? Yes? Boom! 25K, 2 lots, right? 2 lots right there. 25K represents 2 lots because we break our money into four lots. Boom! All right? Protection goes here. All right? Now, relax. copa de tinto o agüita, algo así. Little cup of coffee, glass of water. Just sit back and relax. You know now exactly what your loss is. You know it up front. You have accepted this loss already. The only thing that can happen is something better than that loss now. You see, every loss means I have accepted this already. I have defined, the market hasn't defined my loss. I have defined my loss. This is my loss. It is on my terms. I have decided where I will stop the game. I am in control. Now I'm going to sit back. I'm going to freaking sip on my coffee. I'm actually sipping on coffee too. It's for real. All right. Let's do this. Guys, I tell you, people tell me Oliver hasn't grown up past 27. Probably really. I'm 52. What is that music? I like music, but it's not time for that right now. We can celebrate afterwards. All right. Boom! Now here's where the novice says, oh my God. Look, they watch their piano. Oh my God. Do you know that a novice is more in agony in profitable territory than he is in negative territory? A freaking losing trader feels more comfortable in negative territory and less comfortable in profitable territory. Am I right? They are in agony every moment of a profit. Oh my God. Oh my God. I'm up $800. I don't want to lose any of this. Oh my God. Now I'm up only $750. In pain, in agony. But catch them in negative territory. Maybe it'll come back. I'm hoping it comes back. They get nice and relaxed. I'm going to give this a little bit of room here. I think it's going to bounce back. I might even add down here somewhere. But catch them in positive territory. Novices have the game backwards. Why? Well, because they're novices. Everything is upside down for the novice. Nervous in profitable territory. Comfortable in negative territory. Backwards. Now you should really be comfortable. Take another sip of coffee. Let's do it. All right, it's not time yet. I'm going to teach you when it's time. A little red bar. Little red bar. And what you are saying is one of my traders is, oh my goodness. We might just get a little ad scenario here. And you start rubbing your hands together. You start saying this, yeah, we might get a nice little ad situation. I got another $25,000 to put on this. Yeah. And then the novice is saying, oh my God. You see what I'm saying? You see the two differences? Excuse me. All right. Uh-oh. Here's another green one. The green didn't quite take out the red, so I'm not ready to add yet. All right. Still relaxed. Okay. Uh-oh. Almost. But if that red gets taken out, I'm putting half of what I have on the table. Wait a minute. We get another red one here. All right. Maybe this is the red bar ad. You start rubbing your hands together again. The novice is in hell. No, the novice is gone. The novice is not even in hell anymore. The novice was in hell during the first red bar. The The novice is out of hell now. And you're like looking over at him, sitting on the sidelines, and be like, watch this. Watch this. All right? Boom! All right? Green bar takes out a single red bar. You see, this bar, the bar before it was not red, and the bar after it was not red. This bar takes out the high. Boom! Now, if that's a little too close for you, then okay, it's the next one. Whichever one clearly takes out that red bar. Boom! There's that add. Now, let me teach you when it's time to bank your money. I'm going to teach you when it's time to grab the bag. Do you understand what I mean by the bag? You ever see that emoji of the yellow bag of money? I'm going to teach you when to grab the bag. And this is how you grab the bag. All right? We grab the bag after 2s and 3s. What do I mean by after 2s and 3s? We need 2 periods. We need 2 to 3 periods of this. So you have bought here. Boom! What is this? This is that's your first criteria. You got 1 in the bag. Now we need 2s and 3s. When do you get that next? And it's here. Now, can be 1 solid bar up, or you can get it like this. Multiple. So in reality, if you think about it, let me do a green. So since we're on the long side here, I want to show you. You can get this solid, or you can get this broken up, equaling the same. Here's, and here's. It's just that this one was broken up. So it doesn't matter which one you get. You understand? You got, and then, now each must move your P&L to a new high position. So it's not like this, you get, and then you pull back, and then that's not a because you didn't make a new high. Remember, your first topped out here. In order to have a second one, it must go higher. Now you've got 1, 2, and then you always take profits on 3. Now you can get a so tall that it's really 2 in 1. 1 and 2. Or you can get a move, an individual bar move that's so steady that it can be considered 1 and 2. So you can get the 1 bar, big 2, 1, 2, or you can get the multiple bar, 1, 2. You understand? So in reality, I would call this steady one kind of 2. 1, 2. So you really had 3 pushes. Push 1, pause, pause, pause. Push 2 and 3. 2 and 3. Here's taking profits on, I'm a terrible drawer today, I'm sorry. Here's taking profits on push 3. This is somewhat subjective, I admit. It's not as scientific. I told you that the profit part of the game is the art part of the game. Now, here is the mistake. Taking a profit on push 1. You will be forever a losing trader. taking profits on push one. If you do nothing else, just resist taking profits here. Oh my God. Some people, I tell my traders all the time who do this, what the heck are you doing? But Oliver, I took a profit. Why? It's one freaking push. How many times do I tell you we don't take profits on one pushes? I said, but Oliver, it was $800 in 2 minutes. Is that our rule now? Is that what I had you write down on a piece of paper? I take profits at $800 in 2 minutes. Show me on the piece of paper where that's our rule. Show me where $800 in 2 minutes is a rule. Show it to me. I can't, Oliver. Well, why are you doing it? Because it's $800. I don't care if it's $8 million. If it's one push, you keep sipping your coffee. Here's why. You can't be a P&L trader, a profit trader, just because you got $800, just because you got $600, you take it. Here's why. Why one pushes will ruin your future, while taking profits off the first push will guarantee you stay a loser. Because what are your losing trades? How many pushes? When you lose one bar, how many pushes is that? Somebody tell me. One. So can you make money with one pushes that are offset by other one pushes? No. Does this make sense? That for every one push you take will be offset by a one push loss. More, usually. Never take a profit. But Oliver, what if I lose my one push? So what? That's life. Suck it up and move on to the next trade. But I had $600 and now I have a $300 loss. So what? Suck it up. That's life. That's the way it goes. Move on to the next trade. We don't take profits at one. We don't even call a one push profit a profit. You want to stay a novice? You want to stay a loser? Keep taking one pushes then. You will never get ahead. Never. And you know what? Let me tell you how you will make it worse. Take one pushes and don't stop your losses at one pushes. Let your losses be 2 pushes and 3 pushes, and you take 1 pushes and you will die broke. That is the recipe for financial disaster. My losses are 3 pushes and my wins are 1 pushes. My losses are 2 pushes and my wins are 1 push. My losses are 1 push and my wins are 1 push. All 3 scenarios suck. All 3 scenarios are losing scenarios. All 3 scenarios are practiced by novices. But some people say, well, Oliver, what if I win more frequently with 1 push than I lose 1 push? Can I be a winning trader? No. No, no, no. Not until you put 30 years into this. So right now, no. The way we stay ahead is taking profits on 3 pushes and taking losses on 1. You will stay in business forever. You can walk every single day with your head held up high and confident that you will never run out of money. You will never get hurt. You will never get the wind knocked out of you. You will always come back to live another day. You will last until the day you die. You see, that's what I want you to do. To approach this as if it's a journey, not as if it's a goal. Your journey should be, the Oliver, on the day that I expend my last breath, expel, the day that I die and leave my loved ones behind, I will have placed a train. I want it to be like that. I want you to right now go to your deathbed and you have your family around you one of the last statements you say as you're a family. Some are weeping, some are holding your hand, some are a little sad, but some are just very happy to be there in your last moments, and you crack a smile. Someone says, why is he smiling? And you in a weak, feeble voice say, because my last trade was a nice 3-push win. Yeah. And that's what I want it to be. I don't like this approach where I want to be profitable in 3 months, 6 months, 8 months, 1 year. Who the heck cares, man? This is a lifestyle. It's not something to shoot at for 2 months or 2 weeks or two. This is something to shoot at for your deathbed. If you're going to be doing this 5 years from now, who cares what this trade is? What's the importance of this trade if you're going to trade for a lifetime? It's one trade in a freaking lifetime. It's not even important if you win. And so then the importance of each trade takes its proper place. You can freaking move in and out with the greatest of ease and confidence because it doesn't freaking matter in the grand scheme of this trader's lifestyle. I told the market 36 years ago, I'm not going anywhere. I don't care what you throw at me. I don't care how many losses. I don't care what I have to do. I'm not leaving. You can jump up and down. You can do black backflips. You can shout at the height of your lungs capacity. I'm not leaving. You can slap me. You can punch me. You can body slam me for all I care. I'm getting up and I'm not going anywhere. And guess what? I did that for 5 years. And one day, can you believe this guy? Look at this guy. He just won't freaking quit. All right, I guess we got to invite him in. All right, dude, just come on in. Dude. Jesus Christ, I never saw anybody like this kid over here. It's my New York coming out. You know? All right, guys, we got to go. So you got the 2-3 push rule. Now, listen, some markets, guys, are 2-push markets. The markets that don't have flow, the markets that don't have follow through as much. You take profits on 2 pushes, but you don't ever take profits on 1 push. But most markets are 3-push markets. We're in a 3-push market. You wait for your freaking 3 pushes. Now, some traders take half off on 2nd push and then the final half on the 3rd push. Some traders take half on the 3rd push and see if there's 4th pushes and 5th pushes. There's plays that go on for 10 pushes. I'm saying that you have a right to start taking profits on 3 pushes and in some markets 2 pushes. I specialize in this part of the morning. You see it almost every day. So I am a 1 and 2 phase morning trader. I play this, that's phase 1, and phase 2, and I'm gone to enjoy the day. You understand? So when you see me on Periscope and you say, okay, let's see what round 2 has for us. This is round 2. That's round 1. I'm looking for a 2-round morning out done before 10. In the first 20 to 30 minutes of the trading day, 80% of my days are in the first 20 minutes of the trading day. Now, don't confuse 3 pushes with 3 bars. This is a novice error. I'm not saying sell after 3 green bars. I'm saying pushes. You can have a green bar that's like this. Oh, yippee, yippee, I got another one. No, you can have these little spit-like green bars, right? No, you want... See, that's a push, not a... Who wants... Who... You ever see one of those bill counting machines? All right? You need to put a stack of bills in it and it counts them, right? Do you need a machine for one bill? Let me put my one bill in the machine and have it make the cycle around. No, we don't take profits on, we don't do that. All right? Now, your stock can, we don't take profits on those. But at a certain point, it might, now that's a push. You understand? Now you can string enough of those regular singles together to create a push. Oh, so I say if 3 regular ones are together, that's like one push. But a push is like, whoa, did you see that? Like you want to show your friend. That's what a push is. Oh, shoot, you saw my P&L? Yeah, that's a push. Nobody's excited about that. We don't take profits on those. So don't confuse pushes with the color green. It's not any green, it's green. Tell me you understand this. Yeah? Sure? A little bit or a lot? And guys, my whole existence with my traders, but this is just really the very basic part. But it's powerful, guys. When I say basic, don't think that it is incomplete enough for you to operate with. It is not. You know the 2 main bars to play, the location that they are powerful in, when to enter to the penny, where to protect yourself to the penny, when to add, how much to go in on your first, how much to go in on your second and third adds, and now you know when you have earned the right to take a part or all off the table after 3 pushes. You have learned what a push is. It is not it is a... Now, guys, we're covering almost every component of the trade. We're covering what to identify as an opportunity. Number 1, do you know that novices don't even know what an opportunity is? They go by their feeling. I think this is about to go up. That's not an opportunity. Oh, the market's starting to rally. Maybe I'll get in now. That's not a freaking opportunity. You know, they don't even know what an opportunity is. They haven't defined an opportunity, and so that they can sit and wait for it to smack them in the face. They don't know that. So they go by their feelings and their thoughts, and their feelings or their thoughts are their worst enemies. Your feelings and your thoughts are your worst enemies. You think you're supposed to do what you think is intelligent, and that is wrong, because what you think is intelligent is wrong. Do you understand that you are wired incorrectly as a human being to be a successful trader? That your conditioning as a human being programs you to be bad as a trader. And that's not your fault, but there must be a process of deprogramming yourself as a human being to become reprogrammed the way a trader thinks and feels. Because when you first come to this game, you feel wrong. You feel fearful in profitable territory, and you feel more relaxed in negative territory. You give the stock more room when you're down, and you give it less room when you're up. When you're a freaking regular human being, you think up is good and down is bad. When the master thinks down is good and up is bad, when am I telling you to get out? When it goes down? Yes, of course, it's your stop. But when am I telling you to eliminate the trade? When it goes up 3 pushes. Up is not good. Up 3 pushes is not good. Look at it. Look at the proof. Up 3 pushes is not good. 1, 2, 3. Not good. The novice wants the market to prove to them first that it deserves their money. That's the novice's mindset. The novice says, prove to me, market, that you deserve my money. So the market says, okay, did I prove it yet? That's good, the novice says, and I'm impressed, but you got to show me more than that. So the market says, okay, then what about this? I like it. Now you prove to me. Buy. Wrong. You don't buy after proof. You buy before proof. Do you understand? The novice wants proof first. Show me first. Prove to me first. Make me comfortable first. Then I'll buy. Wrong. You get in before the proof, and you get out on the proof. 3 pushes equates to proof. I want to leave the party. When the novices start coming to the party, I leave. I hate novices. Hate them. Do you see all these novices coming to the game? Henry, come on, let's go. Henry, get your back. Listen, dude, Juliana, get your purse. Santiago, get your backpack, man. We're out of here. I hate novices. I love their deposits. I don't like the novices, though. I don't like them. Sorry. And if you feel hurt by that, that means you're a novice and you need to change it. Yeah. I don't care. Oh, now you should tell me how to play Facebook here. First of all, let's go over the steps. Where are your 2 items? 220. All right. Where does the stock open? Above in positive territory. What does it give you? A powerful bull bar. Beautiful. So I got a powerful bull bar in a powerful location. Great. Got a match. I love it. Now, I'm going to buy the moment, the instant the stock trades above the high. Now, I'm not quite sure if that bar does it. I think it does by a little bit. Boom. All right. Stop is going to be under this bar's low. Now, I put $25,000 into the play here. All right? I got my protection in place. I'm only going to lose 1 bar at worst. So I'm going to risk this. And as you can see, what happens is freaking this. Beautiful. Now, guys, this is... no, this is not yours. This is October. Right? But anyway, so we're putting $25,000 in here. We're putting 2 lots in here. We're protecting ourselves. And look at how you get that 2 red bar in a row scenario. Boom, takes it out. There's your ad. Then you get a 1 bar scenario. You say, I do have 1 more bullet left, don't I? Boom! You can add right there too. Now you're out of money. Now just sip coffee. You know, I swear to you, it is that simple. I'm not saying it's easy because your voices in your head are your enemy. Your thoughts betray you in this process. Your feelings are out of tune with being a master trader, and they become your enemies. So your feelings will start to flare and make you nervous and make you scared and make you want to eliminate the process, make you want to break your rules. Your thoughts will say, remember the last time you listened to Oliver? You lost, didn't you? You're going to listen to Oliver again on this one? And all of this becomes the problem that you have to overcome. That's what makes it not easy. But the simple method, the method is simple. Red bars and green bars above the key moving averages and below. Red bars and green bars above and below. Red bars and green bars above and below. Above and below. Above and below. I don't know if I have any jingle creators in the group, but if you guys can make me a nice little jingle with that, I would love it. I'd put it on my cell phone. That would be my ringer. Red bars and green bars above and below. I got a call, guys. Let me go. I gotta take this. I'm sorry, guys. I'm just silly like that. And it's always, by the way. It doesn't stop. I'm sorry. You got to deal with it. So, guys, we get in above the high, guys, and you think that I'm just showing you. Don't you dare think I'm just showing you perfect examples. Oh no. I can right now go show you yesterday. And you will see it over and freaking over. It's every day. And I'm telling you, I'm begging you to go prove it to yourself. That it's every day. I'm not teaching you something that happens twice a month. I'm teaching you something that happens every day. Do you understand that where I drive my traders, I train my traders to get to the point where they have more money every 8 minutes of every day. Do you understand this? Some people say, Oliver, what do you mean by mastery? We're on our way to mastery. Well, I'm going to tell you, mastery is making money every 8 minutes of your trading life. When you're there, that's when we give you the diploma, buddy. You got the master's diploma. You got the master's degree. Imagine being richer than you were every 8 minutes of your trading life. A master finds money in the markets every 8 minutes. I swear to you, I can sit down and inside of 8 minutes have more money than when I sat down. I swear to you, many of you watch it every day. All right. So we put that 2 lots in, we protect ourselves. We have these 2 red bars, and then the market says, get that out of here. We add here. We got that 1 red bar. Get that out of here, too. You can add there. And then the rest is history. But check this out. You see how you don't get... You're waiting for your... But you get the... Then you get another 2 bars. Boom! Red takes that. Get that out of here. And then you start to get fluid here. You see? So when the market is giving me little bar by little bar, stay cool. Now there's other things like trailing stops and raising your stop from here to now moving it to an 8-period moving average. These are some of the things I deepen your knowledge with in the course, in the program. And now we're going to trail right under the... When you get that train that's like... How do a train sound? Like a locomotive. It's not enough to take a profit on, but every little step progresses just a little bit. You don't sell into that. That's called power. We don't sell into steady power. We sell into abrupt power. So here's steady power, guys. Here's abrupt power. You see the difference? You see? You see that angular change? Here's steady power. And then here's more of abrupt power. You see the angular change there? Do you see that? Does that make sense? Yeah, you see? So steady power is like 45 degrees. That's that push scenario. Now it's time to take profits. But some people say, well, Oliver, what if the stock from here starts this, like that? Well, yeah, that's why we need, when we identify the locomotive, we got to adjust our stop somewhere under the locomotive. You see, you got to stay close under the locomotive so that if you get this, then you're out. You understand? But what you're hoping from the locomotive is that you first get this and you're out instead of this and you're out. But these are some of the more refinements that we go over when you're in the program. I mean, there's a lot of refinement of this that needs to happen. But I want to put the major foundational blocks in place so that this can give you at least the proper start of not being a freaking novice anymore. This event is designed to give you a taste of the first, maybe some of the first taste of your life of not thinking like a novice and not being a novice in your marketplace. Defining your loss and limiting your loss to one bar. Taking profits on 2 and 3 pushes and not one push. Defining, knowing exactly where your entry point is to the penny, knowing exactly where your exit point is to the penny, having a profit-taking rule, 2 pushes or 3 pushes, knowing specifically when it's an opportunity to add, knowing when you should not be afraid of 1 and 2 bar, 1 and 2 red bar scenarios, knowing when to use them as an add more to the equation scenario. I mean, with this, you are going to start to grow and leave behind forever this ridiculous novice play that will have you ruin your family's fortune, whatever little fortune you have. Do you understand what I'm saying, traders? I want the best for you. Now, I don't say that totally from the purest of philanthropic. I don't say that totally as a philanthropist. I just want I want the world to be good traders. Yes. I don't know why. I just want that. I want you all. I wish goodwill on all. I want all of you to be amazing traders. Why? Just because I'm a nice guy. Yeah. No. Some of that's there. But I want us to make money together. You see, I want to be on a jet visiting one of the Bermuda Islands, knowing that when I touch down, you will have gained some 2 and 3 push profits that we will share together. I want, when I go to sleep and wake up in the morning, that I wake up to reports from my Forex traders who will be delivering 2 and 3 push profits while I slept. I want my money working 24 hours a day. And I want us to both profit from it. There's some philanthropy in my efforts because I promised my living God during the dark years that if I ever got this, I promised him that I would do my best to be a beacon of light to those who express the same passion that I had about this. Because when I was out, were no mentors. The groups of traders that won all the time, I wasn't part of the clique. I didn't go to the right schools. I didn't have the right name. I didn't have the right color skin or whatever it was. No one helped. I grew up in this business in a time when that was the way it was. I sent resumes to 178 firms on Wall Street. 178, because the only thing I ever wanted to do in life was to be a trader. And so I applied to every single Wall Street firm. 178 resumes. I got an answer from 2. I went into these 2 resumes. I went into these 2 meetings, these 2 interviews, and then they said no. 178 no's. So then a friend of mine said, Oliver, you know what? How did you fill out your resumes? Did you fill it out with your middle initial? And I said, yes, I always do. So he says, you put Oliver L. Velez on your resumes? And I said, yes, I did. He says, you know what? Send them out again. Drop the L. I said, what? He said, yeah, drop the L. Send it out as Oliver Velez to all 178 again. Then I got an interview for 1. And then that one said no. I got turned down by every single Wall Street firm on the street. And so what did I have to do? That wasn't going to stop me. I had to go to an off-Wall Street firm where, see, if you got a job at a Wall Street firm, you traded the firm's money. So then there was these off-Wall Street firms where you had to bring your own money, and then they would leverage your money. But I didn't have any money. So I had to use someone else's money. I got an investment from 2 people in my life. A broker friend of mine who knew that I had some talent, he gave me $20,000. And then my doctor, who used to freaking bore me to death. Every time I had a doctor's appointment, he would say to his secretary, Oliver's coming in, clear the schedule for the rest of the afternoon. I want to talk to him about the stock market. I would have to sit there and talk to this doctor friend of mine the whole afternoon about the stock market. He gave me $20,000. I took my $40,000 to an off-Wall Street firm, a firm today that is written about in books because they got bought out by the Royal Bank of Canada for $80 million. Yes, I was the number 2 trader in that firm, but I digress. So I go to this firm. I bring this $40,000 to this firm. They give me $500,000 to trade. So, but all the losses are going to come from my $40,000. You see? And I was going to get 50% of the wins. So the firm gets 0 part of the losses. The losses get deducted from the $40,000, and the gains are shared half with the firm and half with me and my 2 partners. But because I only had $4,000 in the kitty, so each partner had $20,000 apiece. I had $4,000. We brought $44,000 to the firm. They told me to bring 50. I begged them, please. I'm $6,000 short, but I'm talented. I can do this, and they let me in with 44,000 instead of 50,000. So because I only had 4,000, my percentage of the profits were basically 10%. I traded all day long for 10% of the gains. My partners allowed me to take a $500 a week stipend out of the account if I was profitable by more than $500 for the week. I traded from Monday. My only focus was to get this $500 in the bag so that I could buy milk and bread and Pampers for my new daughter. My commissions were $50 a trade, which was good, by the way. But guess what? The firm charged us 18% interest on the $500,000 loan. 18% interest. Are you kidding me? This is against the law today, but back then it wasn't. $50 a trade, 18% interest on the $500,000. I got 10% of the gains, plus a $500 a week stipend for sitting in the chair all week. The firm took 50% of the gains. The rule was that if we lost more than one half of the $44,000, I would lose the chair. I wrote about this in my book. My first trade as a free independent trader. First trade with my partnership, my two partners. First trade of the day. Boom! I'm up. I spot the elephant. Boom! I buy into the elephant. This is when I was buying into the elephant. I didn't even wait. I bought into the first elephant bar. Boom! I bought right here. Boom! Bought into the elephant. I was always a bull trader, so I bought. So big at that time was a few thousand shares. I bought 4,000 shares. Boom! This thing just shot up $2. Whoa! I'm up $8,000 in like 4 minutes. Life is good. I asked myself after 8 minutes, should I start this whole career thing off on the right foot? Should I just take it and lock this $8,000 in and just because I've always believed that the first act is important. And if I can close out this first act on a good note, boom, my whole career as an independent trader is off on a good start. Yes, I will take the $8,000. I go to hit the bid. Boom. I want to take the bid, take my $8,000 off the game. The bid drops $1. What? My order missed the bid. Now the bid is $1 lower and I'm only up $4,000. I'm like, oh shoot. Should I wait to get this thing to get back to $8,000 or should I just eliminate this thing now? $4,000 is better than nothing. I'm going to eliminate this now. Boom, I shoot for the bid at $4,000 and the bid disappears. Boom, now I'm break even. As quickly as I was up 8,000, I'm now down back 8. I'm back to break even. Now I'm saying, wait a minute, I'm back to square one, but I don't like the way this thing dropped. I think I should kill this thing. This thing dropped too hard. It dropped too suddenly. It eliminated the reason for my buy. I'm out. I go to hit the bid, that bid disappears. Now I'm down 4,000. I go to hit the next bid. I missed that bid is gone. Now I'm down 8,000. Now I'm down 10,000. Now I'm down 12,000. I get out of the trade finally, negative 16,000. My first trade of my independent professional career. I thought my life was over. I went home and went straight into the closet. I said hi to no one. I didn't even eat dinner that night. I came back the next day, boom, I'm down $24,000 in the account total. 2 days, I violated the firm's rule. I'm supposed to lose my seat. I begged them with everything I had. I didn't even think I could grovel that low. I think I was licking the shoes of these two owners of the firm. And they let me stay up until $30,000. 2 weeks later, I'm down $28,000, almost $29,000. I realized that I'm a hair away from my dream disappearing from me. And I don't know if it was fate, God, but something clicked. That was in December. And that was about December 15th or so, middle of December. At the end of December, I was up $12,000. At the end of 3 months, I was up $450,000 in the account. At the end of 8 months, I was up $1.6 million. At the $1.6 million point, at the end of 8 months, I called up my partners and closed the firm. Give me a second, guys. I'll be right back. Give me a minute. I'll be right back. All right, guys, I'm back. Mucho pipí. All right, guys. So, guys, I swear to you. So, I'm up. It's 8 months. I know I digress here. I'm not young like I used to. I used to be able to, man, hold my pee throughout the whole trading day. I can't do that now. I'm 52 years old. But I tell you what, I don't care if I have to buy Pampers later in my life. I'm never gonna stop trading. All right. Anyway, check this out, guys. So, 8 months into this, right? I'm up $1.6 million. I call up my partners. The day that we knock over 1. I went up real big that day. But my goal was when I get to, in my mind, when I get to 1.5 million in the account, I'm gone. So I actually overshot it. It was $1.6 million, maybe a little bit less. But anyway, so I call up my partners and say, listen, guys, we're done. They're like, we're done for the day? No, we're done. Well, Oliver, what do you mean we're done? So we're done. Look, we're closing out the account. You take your part, I take my part, and we're over. But Oliver, we don't understand. Why? Why are you doing this? Don't we have a good thing? Isn't this amazing? I said, no, you have a good thing. I don't have a good thing. But what do you mean? I said, well, wait a minute. I get 10%, and I'm trading all day long. I'm the one leaving my house, fighting the bad inclement weather, coming down here, whatever the case is, and it's cool. I know I got the opportunity from you, but you guys have made over $1 million, right? In 8 months. Tell me what other investment that you've made in your life that has done that right now. Okay, exactly. So consider yourself blessed. Here's your money. I'm taking my part. I'm going out on my own. To this very day, these two individuals who made well over $1 million, right, as partners, they continue to be my enemies. They continue to spread garbage about me. Continue to talk negative about me. Because I made them over $1 million in 8 months. How crazy is that? More money than most people earn in a lifetime in 8 months. I'm the bad guy. Anyway, I digress. That's just the way this business is, guys. Every single listen, guys, if you find someone who's saying something negative about me but who had business with me, be rest assured, I promise you, I swear to my living God, that they have made millions. There is not a single person I've ever done business with who has not made millions of dollars. Not a single partner ever in my entire lifetime. But when I decide to end it, they seem to all become something else. But anyway, okay. So guys, listen, check this out. So I tell you this because when I first started, there were no seminars. Do you understand? There were no mentors. There was no people willing or wanting to teach you. It was cliquish. It was like there's these little tight-knit clans. I remember when I first went to the firm, there was a very successful group of traders led by this guy called Meyer. Meyer was this incredible trader. I became number 2 trader in the firm. I could never beat Meyer. He was like just a marvel. And I remember I used to hang out sometimes when I wasn't in a trade by the coffee machine, hoping that Meyer or one of them would come walking by to grab a cup of coffee and I could strike up a conversation. And I would sometimes. Meyer or somebody would come over and I'd say, "How are you guys doing today?" And they would look at me over their shoulder like, "Who the hell are you? Like, don't you dare speak a single word to me, you novice." I don't even want the novice. It's like they didn't even want the novice to rub off on them in any way. Just don't say anything to me. That's the environment I came up in this business in the 1980s, before a lot of you were even born. That's how it was. You were part of the club or not. You went to the right school. You graduated with these guys. You got into the firm because your dad knew the owner of the firm, something like that. But if you were from the outside, there was just no breaking in. And there you go. Today, you are blessed. I promised myself and my God that I would never be that way. I would say, "God, if you ever allow me to become successful at this, I will not be like this. That I will help people who are passionate about this because I was that person." And I believe there's a certain fiduciary responsibility on my part to do that. Now, I can't do it free, but I do it with all my might. And I do it better than every single other person in this business. And I don't say that to be egotistical. I say it because it's true. I have produced more successful traders in this industry than anyone alive. Do you understand? That almost every single person you see out here teaching is teaching what I have taught throughout the last 24 years. Some know it, most know it, and some don't even know it because some of these people teaching now learned from someone who learned from me. They don't even know that what they're trying to teach is my work. There are very few people in this industry left who've been at this game for 31 years, but there are a million people that want to teach you at 27 years old. What kind of experience do you have as a 27-year-old? The market's been going up for 8 years in a row, and you're 27. So when did you get your experience? When you were born? Like, how is that possible? How can someone who's been trading for 5 years teach you, and the market's been going straight up for 8 years? They don't even know what a down market is. They don't know what a flat market is. They don't know what a schizophrenic market is. They know one thing: up. How is that possible? There's so many people out here that want to teach you and coach you and take your money and do not have any right to do so. They haven't been in the game long enough. They haven't been seasoned long enough. They haven't done the thing that they're claiming they can teach you to do. It's pathetic and it's sad. But the problem that the novice has is that the novice doesn't know how to differentiate between authenticity and fakeness. They go by websites. Are you freaking kidding me? I had a person the other day say, Oliver, well, I'm comparing you and your programs against someone else in their programs. And on their program, they have 15 bullet points of benefits, and you have 13 bullet points of benefits. I said, really? Give me 5 minutes. I can freaking create bullet points on a website in seconds. Is that how you're judging my 31 years? Is that how you're judging whether something's valuable by freaking bullet points of benefits on a freaking website? Seriously? Well, this program says it has this, and your program says it has. Dude, don't go by that. Experience your mentor. If your mentor is worth his salt in anything, he is putting things out for the world to see for free. If that stuff raises the hair on the back of your neck, maybe you connected with someone. If that stuff gives you aha moments deep inside of your gut, you have found your home. If that person resonates with something so deep inside of your soul in a way, you have found your mentor. If the mentor moves you, if the mentor motivates you, if the mentor makes you see clarity at a level you've never seen before, that's your guide, not a freaking website or a brochure or a piece of paper. Are you kidding me? Do you follow what I'm saying? The internet has given life to people who should not even have a life. The internet has given a voice to people who should shut up. You haven't been in the game long enough. Now, I don't say that from an angle. There just makes a high level shine even brighter. But what makes me sad is when you have these inappropriate individuals taking people's life savings. And when they finally find something with some authenticity, they can't take advantage of it because it's all been sapped out by a 27-year-old who's claiming to be God's gift to the markets because he got lucky once, or because he went to 4 or 5 seminars and stringed some basic information together and repackaged it with his name. Unreal. But you're smarter than this. You know when something connects. It takes 17 seconds to write a sentence on the internet, in a chat room, on a forum. It takes 17 years to build a real reputation that matters. So are you going to give the faith to the 17 seconds or the 17 years? Most novices give the faith to the 17 seconds. Don't be them. Okay. I hear that Portuguese is having some issues here. All right. But guys, let me just tell you this. I tell everyone this, that thank you very much, Constantine. I really appreciate those kind words. But let me tell you this, guys. Every program that I sell you is ultimately free. I want you to understand this, that ultimately I am more interested in your future profitability than what you put up front. Now, what you put up front will keep you honest. What you put up front will keep you motivated, and it will keep the riffraff away from me, the people who are not really serious if this were free. You've got to have some skin in the game. You can't teach your kids to try to be a great tennis player and get the best tennis coach out there and expect that to be free. You can't try to take golf lessons to improve your golf game from a golf pro and expect him to be free. Everywhere else in life, you know that if you want the best, you're going to pay. Don't bring that nonsense here, that idea that it should be free. Nothing worthwhile is free. You want the best mentor, you want the best trainer, you want the best coach, you're going to pay. But what you pay here, I'm going to give it all back. Do you know how? Because if you take this $50,000 account I give you and you start making money, 100% of the money is yours until you get every dime of your investment back. When you get everything you put in for the course, for the program, when you get it back in your pocket, that's when we begin our partnership. We begin our partnership when we are even. Do you understand? When you have gotten everything back. I have spent 6 months, 8 months, a year, 2 years, 5 years, however long it is, investing in you, building you up, keeping you motivated, having my best traders work with you, progressing you, seasoning you. That costs money. I'm willing to be the one at the loss and give you everything back. 100% refund of your total investment. Your first profits go to you up to the cost of the program. And then we share. Now, let me ask you something. Can you think of anything that's fairer than that? If you do the right thing, if you stay dedicated, if you progress properly, it's free. The training, the trading, the account, the everything. I wish that I had an opportunity like this 31 years ago. I wish it existed. All right, guys, I'm still not done. I know we're going a little bit over time because of my stories and stuff like that, but let's breeze through some more examples here for us, okay? Can we do that? All right, good. Look at your items. I'm going to breeze through here, guys. You don't need me spending detail on this anymore. Look, your 2 items here, we open above in positive territory. We get a positive bar. You mark off the high, boom. You put your 25K in, your 2 lots there. Your stop is under your reason, okay? Here's that 2 bar in a row type scenario. All right, boom, add. All right, you can add another lot here. Okay, here's one thing I do want to thank you so very much, guys. Here's one thing I do want to deepen here at this point. Remember, I told you take profits on 3 pushes. So let me give you a 3 push scenario here very quickly. So let's say you buy here, boom, and then here push 1, push 2, push 3. 1, 2, 3. Sometimes your pushes can be individual bars and sometimes not. If they're strong enough, they are a push. So You get 3 pushes. That's profit. You have the right to take all or some. It's up to you. All right. This is where choice from the trader can come into play. All right. You don't have a choice where you enter. You don't have a choice where to place to stop. And you don't, if you're in my program, have a choice of what to put in. You put in 2 lots. And you don't have a choice. You add 1 lot at a time. These you don't have choices with. You have a choice when you should have a choice. When you are victorious, you should get a choice. You have earned your choice. You are profitable. You have earned your choice. You have reached at least a temporary finish line. You have earned the choice. What drink should you have? What drink would you have, sir? How do you want to celebrate? Do you want 1 glass of champagne or do you want 2 glasses of champagne? You have earned this right to choose. Okay? Now, here is profit taking rule number 2. That what if on the way you don't get 3 and you pull back first? So this is the scenario of no real pullback, you see? So the 3 push rule is for those scenarios, those trades that just go without really pulling back. But what if you enter your trade and you start going, but then you pull back, you see? What's the rule then? Now the 3 push rule is over, and now it's called the new high rule. So now your rule is to take profits once you the stock creates a new high. Boom, new high. Now you're back to having the right to take some or all. So remember, the 3 push rule is for the scenario of no pullback. If you get 3 pushes before a pullback, you have reached a profit-taking right before a pullback. If on the way to 3 pushes, you get a pullback first, then the rule changes from 3 push to new high. Now, I teach traders to sell new highs because 72 to 78% of all new highs fail. Tell me you understand this. Do you have the new high profit rule if you get a pullback first? All right? Yes. Got it? Okay. Good. So we have 2 profit-taking rules. We have really 2 add rules. So when you get a pullback, guys, check this out. If you get a pullback and your pullback stays, you see this initial move up? Here's the top 50% of the move, and here's the bottom 50% of the move. If your pullback stays in the top 50%, you can add on the pullback when green takes out red. Let me repeat that again. If your pullback stays in the top 50% of the last power move, now you pull back. If it stays in the top 50%, you can add on the pullback when green snatches red away again. So let me show you an example of this. You see this pullback here? So you look at this move. This is the move. Now, where is the halfway mark? I would say if you cut, this is the top of it, the top portion of it, and here's the bottom portion of it. So this pullback stays in the top portion of the move before the pullback. Now, when does green take away a red again? Boom! Right there. There you can add. It doesn't have to take away all the red, just the most recent red right there. It's the same here too. Like this pullback stays in the top 50% of this power move. So you can buy on the red elimination. Hold back, buy on the red elimination. But now that you have, this is when you are in new high territory. Now, when you earn the right, this is why I call it the right. When you reach profit taking territory, it is not, doesn't mean just take a profit every single time. It means you have earned the right to take it, meaning that you can't be considered wrong if you take profits. But some traders earn the right and still keep their play a little bit to see if the new high becomes more of a new high. So for instance, in this case, you had your pullback, now it's new high, and it kept going. So some traders will say, I'm going to take some on the new high, and then I'm going to see what the rest does. Nothing wrong with that. Notice how in my approach, you have zero choices here, and all your choices are after victory. Oliver, should I take all of my gains? Or should I take a portion of my gains? I don't care. Do whatever you like. You can call the psychic hotline for all I care. That is not a problem. You see, I'm not concerned with what you do after victory. I'm concerned what you do when you don't have victory or when you're on your way to victory. Achieve victory, and now you have choices. 1 glass of champagne, 2 glasses of champagne, or you know what? Hold my champagne. Keep it chilled. I'm going to rock this baby for more. So that is why I say you have earned profit-taking rights, not the obligation to take a profit, but the right to take a profit. But before 3 pushes, you do not have a right. Before a new high after a pullback, you do not have a right. You hold your post. You stand your ground until you get the right. And this is where the novice goes wrong. They're constantly changing in the middle. The middle is what gets them all messed up. First of all, they don't take their losses when their losses happen, when their stops get hit. But then they mess up the trade in the middle even before. So they haven't reached a profit-taking point, but they haven't reached their stop yet, and they're always meddling with the trade in the middle. Do you understand? The middle is your enemy. You cannot mess with the middle. You stand your ground in the middle. If your stop is not violated, relax. So there are 2 important points, your stop and your profit-taking rights. Nothing matters in the middle except add points. And of course, later when I teach you in the course, stop adjustment strategies, which are very important. So the middle is all about stop adjusting and adding and stop adjusting, adding and stop adjusting, but not eliminating. We eliminate at our stops or at our profit-taking right areas. You don't eliminate because you're scared. Oh my God, the market's starting to pull back on me. I think I should get out of my trade. No, stand your ground. Oh my God, this bar is a little too much red for me. I'm getting scared. So what? Stand your ground. Your stop is not hit yet. I got to go pee. So what? Get some diapers. Or just let it out. Stand your ground. You know what I'm saying. No excuses. Someone said the other day in a comment here, when I was announcing this free event I was going to share with you today, someone was saying, I just want to let everyone know, they typed this in the comments, I just want to let everyone know that I've been through one of these and it's amazing. The information is powerful. The knowledge is very deep. It's amazing. But I will tell you, I tried it and it's hard. And And that's it? Like, that's it. He ended the statement like that. Like, I thought I was like, it was an incomplete sentence. Like, what? That's it? I was looking for the second part of the post. It's hard. That's it? Like, wait a minute. Oh, but Oliver, it's hard. That's it? That's what you got? That's what you come to me with? That it's hard? Like, dude, what world are you living in? Like, what book of life has been given to you? I want to read that book. Who promised you that success at anything was going to be easy? Like, where is that written? Show me something in life that is worthwhile achieving that's easy, and I will show you something that doesn't pay. Because what's easy doesn't pay anything. So, do people get paid to walk? Because walking is done by 95% of the people on the planet. It's easy. You want to get paid for walking? What about getting paid for waking up? Everybody who's alive wakes up. That's easy. Or I use the bathroom about once every 2 hours. You want to get paid for that? Everybody on the planet. Everything that's easy, everybody can do, and there's no payment for it. The pay is because it's difficult. Who told you that success was supposed to be easy at anything? What did your parents tell you when you were a kid? I'm tired of this. You know what? Listen, man, my dad was a semi-professional. My dad played minor league baseball for the Dodgers. And listen, let me tell you something. If I didn't do something right, I knew about it playing baseball. My dad would say, man, you suck. What are you doing? Oh my God. Like I couldn't, I could find someone off the street, Oliver, that can do that better. What the heck was that? What was that? And today we have every loser gets a trophy. Oh, there are no losers here. No, everyone gets a trophy. Everyone won the game. Are you kidding me? Seriously. For real. What are we teaching people coming up today? That everybody wins? That life is easy? That everybody's supposed, or just because you have a desire to be a, a, a profitable trader, that you're going to win? That it's going to be easy? It's supposed to be easy? I don't know what planet in this galaxy or what planet you live on in any other galaxy for that matter. I don't know where it is, but here on this earth, what pays handsomely is what most people can't do. And what pays nothing is what almost everyone can do. So that's the law here on planet Earth. Now, if you come to me with it's supposed to be easy, maybe you come from a different planet, somewhere in a different galaxy that I don't know about. But that's not the way it works here. This is going to try everything you've got. And thank God for it. You'll be a better person for it. This is going to bring you to the brink of almost personal disaster, not financially because it's with my money, but just almost deep disappointment in yourself. Thank God you'll be a better person for it if you survive and overcome it. This is going to make you doubt yourself. So what? Get through it. This is going to make you want to just quit. So what? Don't quit. Come back the next day. And it is this process of falling and getting back up, and falling and getting back up, putting this dirty rag and dipping it in the tub and pulling it back out. And it might be imperceptible to you at the moment, but coming back out of the water, you get dunked in the water, but coming out of the water, you're just a tiny bit cleaner, tiny bit better. It may not be noticeable yet, but you're not the same person who fell. And then you fall again. Boom. You come back out of the water again. And it may not be noticeable yet, but just by coming out, you've left something in that water that you no longer need or have anymore. You keep getting dunked and you come out. You keep getting dunked again. Until the dunks start getting less frequent and less frequent until one day you are freaking pristine clean and no further dunks are necessary. And if you don't survive the dunking period, the falling period, you will never learn to walk. A child learns to walk by falling, not by not falling. Try to prevent a little baby from falling, and that'll be the clumsiest kid. He'll never play sports. You protected him from falling all the time. No balance, no anything. No agility, no coordination. Do you understand that physiologically, that walking, placing one foot in front of the other, that walking is the physical act of falling? Do you understand that this is scientifically true? That when you are walking, you are falling. You are just catching the fall with one foot. And then you fall again and you are catching the fall with the next foot. And that you are getting to your destination fall after fall after fall. And that's how you progress in anything in life, not just trade. You fall your way to success. You fail your way to success. You lose your way to mastery. How can you ever hope to become a master if you have not been brought to the breaking point? How can you be considered seasoned? How can you offer something of value to someone if you have not been tried and tested by the fire and have survived it? How? Embrace your bad periods. Respect them, honor them, because your future gains are locked inside of your current losses. Crack them open and let's get going. Tell me you understand this. No excuses. All right, I'm almost done here, guys, with some of our basic carry forward here, guys. I just want to quickly go over this. I want to show you the opposite. You're in positive territory, but you don't have the first bar positive. Uh-oh, you got a mismatch. You got a scenario that doesn't click together. It doesn't work together. They're fighting each other. The position is positive, but the bar is negative, and there's a clash. So what do you wait? In positive territory, with a negative bar, you wait for green to say, get that red bar out of here. What does it think it's doing? This is positive territory. It's not negative territory. Get out of here. So we wait for the match. Boom! There's your $25,000 moment right there. Boom! You see? Protect yourself. Now you know the rest. You add on 1 and 2 red bar pauses. Take profits on 3 pushes before a pullback. If you get a pullback, your profit-taking rule is a new high. Beautiful. Here is yesterday, guys, a company called Seagate Technologies. You know it. Some of you know it. Seagate storage company like Western Digital or whatever. But here we open the first bar of the morning. We open above the 200, above the 20, but it's a red bar. So you wait. You're relaxed, cool, calm, collective. Doesn't matter. You're waiting for either this to not be a play, because it's possible that it won't be a play, but you say to yourself, if green snatches this red bar away, I got my $25,000 ready. And lo and behold, yesterday, bar number 2, boom! There's your $25,000 moment. Protect yourself. And you tell me, after you have put $25,000 into the play here, what is your and you protected yourself down here, what is your very next act? You tell me. Sip coffee and then Raven. I love that. My Raven here. Not only does Raven ask a great question, she comes up with a great answer right after. I love it, Raven. Are you one of my traders? If not, I want you. I need you. I love it. Add, boom. Take 1/2 of what you have left. Awesome, I knew it. We had to sound like one. Boom. Add. There's your 1 lot add. Now, let's count the pushes, guys. I would consider this a push. That's push 1. Then you add. Push 2. And then, you see this? Push 3. At the height of that bar, you got nice distance. That's not a bar. See, this is a bar. That's not a bar. That's a nice bar. So you got 1, 2, 3. You're taking profits right here. Guys, listen, 31 years, I know what I'm doing. Why is it the number 3? Because my experience have taught me that after 3 legs, the market needs a rest. Some markets after 2 legs because it's not that healthy. But in healthy markets, after 3, you need some type of rest. So you get 1, 2, 3, profit take. Now your first pullback. Now, guys, look at this. Your first pullback stays in the upper 50% of the first leg of strength. It stays in the top 50%. What's your next act for round 2? Boom! I'm sorry. I apologize to all the cats laying around, all the dogs, all the sleeping babies, and maybe the wives and husbands reading a book or something nearby. I apologize. But I just have to do it. Sorry. Boom! All right. There's your ad. And now, what is the new profit rule? It's not 3 pushes. It is what? You tell me. New high. So once you cross the new high, you have earned the right, but not the obligation, to take a profit. And you can take you can take some or all of it. That is your choice. But here's my general rule. If you decide on this bar, I have earned the new high, but I am going to let this rock a little bit because the way this made a new high here, I think we're going higher. That's fine. Don't lose the new high bar. So this is the new high bar. So now your stop must go under the new high bar. Don't lose this bar. It's like a brand new trade. Tell me you understand this. If you decide to keep your new high, that's fine. Don't lose the new high bar. Doesn't it make sense? It's not rocket science, it's common sense. You just need someone to guide you. Guys, listen, do you know how many years I can shave off of your development? How much faster I can get you to the finish line? How many roadblocks I can save you from? Dead ends that take years to figure out. Oh, what? Shoot, I was on a 2-year dead end. Oh, no. Let's do this together. It's real. It's as real as you will ever experience in this industry. I am telling you that. If you feel that, if what we're talking about today resonates with you in any way, let's freaking finally stop making excuses. Let's bite the bullet and let's do this together. There's power in numbers. And put your family's money away. Stop this poor mentality. I don't need Oliver's money. That's a poor man's mentality. But it's clothed in some false notion. I'm independent. I can do it myself. No, that's dumb. Billionaires are independent too. They don't do it themselves. They use other people's money. Let's do this. Let's do it. And what you need is something structured, something detailed. Not this freaking basic, generalized stuff that's out there in the market. So general, you are up in knots when the market opens because you still can't figure out what was communicated to you. None of that. And guys, you need guidance every day. Do you understand every day that you can't take a seminar and learn how to trade from a seminar, not even mine? Think about this. If it were as easy as going to seminars, you know how many people are chronic seminar goers? They would be the billionaires. The people who went to the most seminars would be the billionaires. You can't learn how to trade from a seminar. A seminar prepares you to start the preparation. Like there's a prep for the prep. A seminar says, okay, look, here are the tools. Let me show you how to use the tools. Now, okay, we got the tools, right? Now let's go start preparing with the tools. The seminar is the prep for the prep. You haven't begun when you take a seminar and then go to the market with the tools that you learned in the seminar. That's just preparation. So you are preparing to prepare. Now we take this. What is needed after a seminar is daily guidance by someone who has already arrived. Look, it says, wait a minute. No, not that. What's the profit rule now that we have a pullback? Have you forgotten? Oh, shoot. Yes, it's not 3 pushes. It's a new high. Okay, got it. You need that daily reminder. You need that constant, that group support and that constant guidance every day of your trading life that doesn't have an expiration point. I don't have an expiration point. You pay one price for life. Do you understand? Forever. And so you will either quit or you'll make it. There's no expiration. There's no, well, wait a minute, you've been at this for 6 months and you're not progressing yet. You're not making it yet. So we're eliminating you. Never. It took me 5 years. What if someone eliminated me after 6 months or 8 months? I wouldn't be Oliver Velez today. I don't eliminate traders. They eliminate themselves, but you'll never get fired from me as long as you have the passion to do this. All right? No, it does not matter. A good question. So someone was asking, Oliver, does it matter in this case that the 20 is under? Not really. So at the open, it doesn't matter. But later, it matters more. So at the open, it doesn't matter if this one is under or this one's over. We're taking the block. and we're saying, okay, this is the opening block. Are we above the block or below the block? It doesn't matter if the block has the 20 at the bottom of the block or at the top of the block. It's just the block. Tell me you understand this. A few of you let me know. We're grabbing the block that is defined by the 20 and 40. And then this block becomes the opening support or resistance. So are we above the block or below the block? All right. And so here in this game yesterday, you're here, enter, your stop, your add, your profit take, your add, new high, stop adjustment to pivot one. That's in the course I teach you. All right. And then if you want to, you can just pivot stop right out of this. And boom, you're out here. But anyway, the bottom line is you have the basics now for carrying a position from the open, knowing what to do at almost every single step. There's a lot to fill in, but it's enough to get started. And you are way better off than you were before this event today. Now, what I want to show you, I want to skip ahead a little bit here. You see this pullback, boom. If you stayed with it, your stop is here. People say, oh my God, I think I should eliminate this trade. No, you stand your ground. And here is your out on the new high. Remember I was saying you 72 to 78% of all new highs fail right after or shortly after the new high, which is why I teach you to sell on the new high. And if you don't sell this new high, then you can't lose more than the new high bar. It'll save you and your profits. So I wanted to point that out because I've got to skip forward here. It's a little longer than normal here. So I'm going to skip forward to a few things. Here is first red bar of the day. Boom. We take out the red bar, which clears the block. And there's your run. Very quickly here, guys. I want to, because what I want to do is I just don't want to show you the long side. Same scenario here. First red bar, boom. Second red bar snatches the yes, you have to have a high before there's a new high. You have to have a prior peak. So a new high you can only have a new high after a pullback. So for instance, you have a pullback now here without a pullback. But sometimes you get a pullback before you get your three pushes, and sometimes you get a pullback after you get your three pushes that create round two. That's when you hear me on Periscope saying, okay, guys, got out on round one. Now let's see what round two has. Biggest dilemma today. And the people who work closely with me will corroborate this. My biggest dilemma is what the heck do I do with the rest of my day when I'm not teaching my traders? So I get my trading out of the way and my teaching out of the way, usually by noon every day. So I'm usually done 18 to 20 minutes of trade. And 87 times. Maybe it's a different one. There's a different activity. You start to run out of freaking ideas. I mean, you think this is funny, but it's not. You really start to run out of things to do. True. It is so, so true. You know? All right, guys. Very quickly, but can I get to some? I just want to get to some of the shorts. Right? Okay, here we are. I want to get to some of the short scenarios. So here's where you open under the block. Right? You There's your protection, and you're looking to profit on the way down. And for those of you who are very novice at this, you can profit by betting on a stock going down, just like you can profit betting on a stock going up. So here you're betting on a stock going down and making money and profiting on the play down every day. I would be a happier individual. And I'm pretty happy. You say, Oliver, you can be happier? Yes. Give me down every day, and I will show you a different level of happiness. I love it. Isn't that a great scenario? No, 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 Oliver. I don't want to make big money fast. No. I want to make small money slow. Get out of here. About to close out on us, guys, but I'm sure you this. Look, short protection, you know. Now, let me show you some examples. This is from yesterday, guys. No, it's not from yesterday. It's from October. Sorry. But look, it's very simple. Here's your block, right? Here's your bar. Boom. Guys, I don't come up with this stuff just out of thin air. This is 31 years of trading experience speaking to you. When not to be afraid of the opposite color, when to use the opposite color as an ad, when to hold your. When do you earn a right to take a profit after a pullback? What if you don't have a pullback? All of these are $64,000 questions. The answers to these questions will make you rich. Okay, let me give you an example of news. This stock, Discovery Communications, they own the Discovery Channel, right? It's a cable company. They own the Discovery Channel. They come out with good earnings. Listen to me carefully. Discovery comes out with positive earnings the night before. The stock opens under the block and gives you a negative bar. Positive earnings, negative bar under the block. What do you do here? In short, boom. What's the importance of the news in that scenario? All right, let me give you scenario number 2. Okay, stock comes out with negative earnings. Negative. The street is disappointed. Your stock, Discovery, comes out with negative earnings. Okay, next question. Did the news matter in either of those two scenarios? Drop it. News is for novices. If all would be, you know how many billionaires would be piling in this room? None. Because if you're a billionaire, why would you even be here? But you'd be a billionaire. Leave news to the novices. Leave news, the stories, to wage typist who got a note from someone called news, who then types that note into a terminal. And then there is a boss that decides when the news that was typed into the terminal gets released. Someone knew it before the minimum wage typist, and someone knew it before that person. Come on. It's the footprints of money that matters, not the news about the footprints of money. This is, I don't need your opinion. I don't need your analysis. I don't need anything from you. I just need my $25,000. Boom! And that's it. I don't care what the news is. That to me is a short. Guys, look. Here's your block. You open under the block. Boom! 25K. The rest is history. What can I say? Guys, listen, at this point, you got the foundation of my approach in the bag. There is not very much. One single green bar now, because you're in the opposite direction, followed by a violation. All right? And it goes on and on and on. Here's your block. Happens. You go up first. So then where you just simply wait. Now, every time I wait, uh-oh, here it comes. I wait, it's going up, up, green. The very next time red says, get that green ad. Waiting to execute at the speed of light. Here comes the red. Here comes the red. It's almost there. And that's my executions going off right there. Boom! And this is the halfway mark. The bounce doesn't violate the halfway. So I'm getting right back in. Boom! This red eliminates green. Boom! This red eliminates green. You see? Boom! All the way. My 20 that I stop it. Mine. You have enough to make yourselves wealthier than you were last week. Here's your block. Here's the move back toward the 20 and the elimination of green. Boom! The picture of power declining 20 under the 200. The stock declining under the 20. My God. Simple. Trading program is our most popular program. But I want to show you something here. There are now, this is brand new, pro training. No training, no education whatsoever. We just drop you in the room. You are with our traders in the room. And I fund you. I give you an account. If you want to try to flop around without being trained, make that $3,000 gain. Understand? If you make that $3,000 gain, I turn you live. And then listen to me, the first gains go to getting you your $147,000, your 147. Same $50,000 account. Self-start is the most popular because this is where the training is full. Zero training and education, partial training. Now you get the same $50,000 account, you graduate it, and then all of your gains are yours until this is back in your pocket. You recouped your every single dollar. You get 15% of the gains. Here, you get 20% of the gains. And here, you get 40% of the gains. Of the gains, and I will take the 40% of the gains. Sign up to the Self-Start program. One fee for the rest of your life. This is like trading and saying, I'm only going to lose one bar. You're only going to lose. How amazing is that? You can lose $15 in one trade, $1,500 in one trade. So listen to me, hear me out. Sign up for Self-Start before the end of February, and I will flip this because this program offers the trader 40% and I receive 60%. I can't create a better incentive than that. Do the right thing, you get your $1,500 back, and then we start sharing. I need more traders. This year is going to be one of the biggest. Let's not let any one of these opportunities slip us by. All right? Now, pro trader is these two levels are the minor leagues. Minor leagues. Okay? These two levels are the major leagues. All right? The trader here is getting 85. Getting from, excuse me, uh, excuse me, 60% of the gains all the way to 85% of the gains. And it goes like that. Excuse me. Now, you can start off as a self-start trader and move to pro once you feel you're ready. You can start off with kickstart and move to self-start. Yes, this is why the multi-levels are there. Maybe you can't afford pro yet, but you can afford self-trader. The idea is that I have eliminated excuses. The most important now we're in December, and look at all of these traders posting their gains. Wow, maybe I would have been one of them. No woulda, coulda, shouldas, no more excuses. Let's freaking act. Life doesn't get closer than this. It's money. You're going to be with one of the most sophisticated, most powerful group of traders in this business. I promise you that. Some of our traders are going to impress you to no end. You're going to be like, wow, I want to be like that trader. And that's going to be one of your guides, one of your buddies. That's my motto here. No trader left behind. I encourage my traders further along the path to help our new traders coming in because you were a new trader once too. I told you my story about no one helping. And I vowed I would never do that. We pulled them under our wing. No trader left behind. You do not advance unless that trader advances too. Now, guys, listen, all of this is online. All of it. You don't. showed you the map. I have traders in Australia, traders in China, traders in India, traders in all parts of Europe, traders in Latin America, traders in the United States, traders in Canada. I might even have some traders on Mars right now. I don't know, but I have them all over. You don't have to fight inclement weather. You don't have to hop a plane. And I'm with you every step of the way. Now check this out, guys. Not only if you sign up, the self-start in particular, before the end of February, I will slash this price to $12.97. Of course you can, all over the world. Listen, I don't know if my signals reach to outer space, but if they do and you live there, you can sign up. It doesn't matter where you are in the world, guys. You need an internet connection. And you need to be able to listen to me just like this. There's no deals on this. That's low enough. You'll get the self-start for $12.97 before the end of February. March 1st, we're going back to $1,500. If you sign up before Monday, if you who say boom without hesitation, without thinking, without thought, without analysis, without checking the news, the weather, the planetary alignments, or whether Saturn's in its orbit or Mars is in its orbit. Let me check the weather first. Thinking is doubting and not knowing. People say, I know. This is for me. I'm doing it. Boom. $9.97 for you. You commit before Monday. All right? That's it. That's it. So you got the $9.97. All right? You will have the lowest price on Self Start, Pro Start, or Master. Any of these programs, I will give you the lowest price of the year. But you got to commit before Monday happens. If Monday comes along, we go right back to the $12.97. And if combo for you, this is not for anyone except if you're in my Latin American region. I'm sorry if you don't live here or around in Latin America. This does not apply to you. All right, you can listen to it, but it does. Camp combination. My next live trading camp is going to be held in Medellin, Colombia, in June of this year, and we sell a combination. So it's not that you should wait till June. That's why we sell it with a combination with the self start. You start now with self start. trading camp becomes where we're all together, trading live together, in person, rocking the markets. You have your start already. So you use the self-start to get prepared for the live trading camp. And this live trading camp will this in the United States for $5,000. I sell the live trading camp by itself for $5,000. That's why I say it's only for my Latin American region. You're going to get the whole thing. Gotten this. So consider yourselves lucky for being born in South America. So that's your deal as a Latin American trader of mine. And I hate how this sounds, but I'm going to say it from one of the best out there, if not the best. All right? I've committed to educating you for the rest of your life for one fee. Your training will never stop. You will never have to put your capital at risk. And if you lose, it's my loss. You never have to pay me back. That's point number 3. And point number 4 is that I've given you the ability to make at a level of profitability that will get you every single dollar back. So your first goal should be to first graduate, hit that $3,000 mark. And your second goal should be, I'm now going to get my money back. And I'm going to make myself rich. 3 goals. 1, graduate. Goal number 2, get your money back. Goal number 3, get rich. Or die trying. We're speaking all over the world. I've been recruiting traders for the past 10 years of my team. We're not over 7,000 traders strong by mistake. I don't have the best selling says negative things about someone who's doing nothing. We're rocking this industry, and I want you to be involved. I believe I put something together where there are absolutely no excuses for you. From I will say this as my bowing out statement. It never gets tired for me. That I am floored and staggered by your generosity. I am blown away by your support, your bless you. And I promise I will spend every waking moment of my professional life rewarding that type of respect with everything I have. I will never give up on you. You are the reason I breathe. Thank you so very much.